stage I'm at in my second home. So my short question is, when do I sell the house? Um, the long kind of circumstances around this, you know, a lot of it. The house got done a couple months back, and we've been trying to rent it for the last couple months. And I don't know what it is, but it hasn't been moving. It seems priced right based on the numbers. I've been checking against my property manager. It might be a little bit of a unicorn for the neighborhood, I think, is the issue. So the neighborhood's full of 3 1s. This is a 4 2. So it might put the rent outside the ability of most of the people that would be willing to live in that neighborhood. And there have been some other small things, like people wanting a fence in a particular spot, that we've addressed, but it's getting to the point where I think I need to sell it. Like, my time, this might have happened a couple months ago, but my time would be better used elsewhere to get a cash flowing property that, uh, may not be as much as this one, but it would be quicker, easier to rent, and I could move on. So I can give you more details, but that's kind of the Sports Center version. Is, in your opinion, when should I sell a property if it's just not working out?
Yeah, that's a good question. So I would almost take a step back and ask a different question. How do I get my property rented? And then the last step being, if none of these things work, when do I sell? Like, how should I sell? Because essentially it's after you've tried a bunch of other things, right? But I will get there. So the first thing is, what's it priced at, just practically?
Like rent?
Yeah.
Right now it's priced at $1,875.
Okay. Do you know what, have you guys opened it up to HUD?
No, we have not.
Okay. That might be something to consider, because do you know what HUD would give you for a 4-bed, 2-bath in Louisville?
I don't. I know that, at least initially, because the house is in a nicer area, that my property manager has been rejecting any HUD or Section 8 people.
Mm-hmm.
So I haven't looked into that, because since it's in a nicer area, I thought it would rent more quickly, and I just didn't think about looking up Section 8, but I will look into that. That's a good idea.
Yeah, because let me see if, let me go ahead and just share my screen real quick. Boom. Okay. What county are you in?
Jefferson County.
HUD. Okay, fair market rent in Louisville. Okay, usually it's usually not rentdata.org. We can check that out, but it's usually going to be under HUD, or more than likely your local housing authority. Okay, might be that you do have it.
I at least have the website, but
okay. Send that over in chat if you would, so I can show everybody else what we're looking at.
I think this is it. This might not be it, but I'll send it.
Okay. Okay. All right. Yeah, because it's usually not under the HUD umbrella. So this is interesting, because they've got something for HUD under or for Jefferson County under HUD, but it's usually the local housing authority. Okay, Section 8, rent subsidy and family share. This might be it. Okay, how much are they going to allow? So let's see. 4 bedrooms. What are the standard? Okay, so 2021 payment standards for a 4-bed, you could get $1,549. All right, so what that is rent is $1,409, and then they give you an extra about $150 for utilities. So the most you could reasonably get is probably $1,400 to $1,450 for someone coming in on HUD. But this is just for everybody else that's evaluating, is it going to be worth my time for HUD? This is about what it'll look like. The representation or the way that it's delivered looks different each time. But for you, what that means is 1450 is about what you could rent it for. Now you mentioned that this is kind of a more premium area, so it makes sense that it would be the market rent would be a little bit higher. Have you guys dropped rent at all?
Yeah, we dropped it. So that's one of the questions I had. And two, that's like a sub question. If we could get to it, is how to evaluate how competent my property manager is. Because what I told them was 1850 is what I'm expecting based on the numbers I'm seeing through comps. Um, Obviously, 2000 would be my, tippy top, what would be amazing to get. And then 1750 would probably be my bottom. And they priced it with that information at 1995. It sat for a month. We dropped it to 1875 and it sat for another month.
Okay.
And that's
I
where
would
we're at
probably, especially right now, just given that we're in the summer, there's a lot, people move more during the summer than they would during, say, November or January. So there's a lot more activity out there. So if it's listed at 1875 and it's sat there for a month, the chances are that it's not going to rent for 1875.
Right.
So, so there's a few things to consider here. One is, what's the capacity for your property manager on marketing a property? So have they listed it on the MLS?
Yeah, no, they listed on Zillow and they put it out on Facebook Marketplace, I think, were the two places that they were advertising.
Okay.
I think they have their own thing too. I'm not exactly sure, because they've been sending me reports and still getting info from some third party thing, but I'm not sure what it is. I think it's their own thing.
Yeah. Okay. So, so a few things. I would call my property manager and be like, hey, what's the feedback that we've been getting? Is it priced too high? And how have we marketed it? Because there's a few different channels you can market it. You can put it through Zillow and realtor.com, and putting it on the MLS is going to get you a lot more traction because more people use the MLS. It's more ubiquitous, like it's more accepted everywhere. So generally, the people that are looking for properties, this has been my experience, properties that are nicer, that can afford more, and they're more high quality tenants, they're going to be finding them through probably MLS, maybe a little bit of Zillow, but more predominantly through MLS.
Okay.
And this is just a generalization, but when I do kind of guerrilla marketing for my properties, I post them in every Facebook group imaginable, right? I take the link and I post them in all the Facebook groups that are, rent for this property, or, houses for rent and sale, even online garage sale places. I'll say, hey, check this out. Gorgeous, newly renovated property, 4-bed, 2-bath for only $1875, right? And then I'll tag my property manager and just say, if you're interested, reach out to my property manager's name's Tammy. Reach out to Tammy, and I'll mention her so that they go directly to Tammy. They're not like, hey, have her reach out to me. And if they are, I'm like, this is her. Reach out to her. Send her a message, right? Right. I'll even she's got her cell phone, her work cell phone, posted publicly. So sometimes I'll even say, hey, text her at this number. This will get you that information that you need. Generally, the people that come from that, and this, I would say 80% of the time, are going to be more lower income renters, because that just seems to be the channel that and maybe this is market dependent for me, but those tend to be just the channels that they use more often than, say, Zillow or MLS. Some of that is because they're looking for a direct owner to manage the property and not have to go through a property manager because they've got a felony or they've got credit issues right now, and they're trying to get a property rented with a little bit more flexibility on the rules. So those are a few things to consider. Go ahead.
What should you do on that? So I think one of the issues has been that there have been a lot of interested people, but they've been kind of shelved because they couldn't prove that they could pay that rent. Mm-hmm. So lately, one of the people that I know that applied, apparently he gets paid somewhat under the table, and he was able to produce bank statements that showed that he was getting paid. But it is a little bit sketchy because I don't know if he reports it to the feds or whatever the deal is there. Yeah. I didn't really understand what under the table meant. So I've just thought, okay, in delegating this to the property manager, I trust their judgment. If they're saying that this person can't pay the rent, but at what point is one of the things I do say, well, we may need to just take a risk on a tenant And if they can somewhat corroborate, maybe not to 100% satisfaction their income, we should probably take a chance on them.
Yeah. Yeah. So when someone says they're getting paid under the table, usually that just means they're being paid cash, so that it's not documented, so that it doesn't go through a bank. It doesn't go through, there's really not any traceability to the money. And so that's usually what that means. Now, if they provide bank statements saying, let's say the last 2 months they've shown it, if it's a question of whether or not that payment is consistent, that income is consistent, I would just say, hey, because this isn't stable, I need 6 months or maybe even 12 months of documented bank statements. Because if that's the case and they've been paid for 12 months and it's consistent, I'm comfortable with that, right? Because essentially you're asking the question, am I comfortable with someone who there's a little bit of risk as to whether or not they can pay this rent, but they've shown that they could pay it for the entire last 12 months, and I get 1875, or do I drop it to 1800 and know that whoever applies for it and gets it, first of all, it's a risk that nobody will apply for it still, but whoever applies for it and gets it is more of a qualified tenant, right? That's essentially the question that you're asking. Because what I do is, as far as dropping the price, if it's not a marketing issue, right, like they're actually getting enough eyes on it and they're getting showings, then it's a pricing issue. So if you're getting eyes on the property and your property manager presumably is going through showings and getting feedback from people, then it's a pricing issue. If you're not having any showings, it can be a marketing. It could be just a crazy pricing issue. For example, if you price this thing as $4,000 a month, no one's going to go show it, right? But usually it's a marketing issue, meaning that it's not getting in front of enough people's eyes, right? So if that's the case, MLS, I would recommend that you take the link and you go post it in a bunch of different groups, as far as just to get more eyes on it. That's the marketing side of thing. The other thing is the pricing issue. I would lower it $50 every 2 weeks if it doesn't sell. Now, if it's, for example, if it's a studio apartment and you're pricing it at $750, I would drop it by $25, right? I wouldn't drop it all the way down to $700. So, but those are a few different recommendations. Is it priced correctly and is it marketed correctly? And then if it's marketed correctly, you'll get a bunch of showings, get some feedback saying, hey, we need a fence here, or we need whatever it might be. And then once you put in that fence, have that realtor or your property manager reach back out to that person and say, hey, they'll do this, or they've already done this. Would you be interested in it? Another thing to recommend is, if the property manager, if they're showing, you might give them a heads up ahead of time and say, if there's something that they need done, let's say it's under $1,000 or $500 or whatever that might be, let them know that the owner really cares about the property. He'll do it, right? So if they're saying, man, I really want a fence there. Well, okay, if I can get I think the property owner would probably go ahead and just fix that fence. So if we include that and we guarantee that, what do you think? Okay. That'll do two things. One, it will avoid some of your negative feedback, or it will get to the root issue, right? Because let's say it's not actually the fence, it's just they think the house is ugly, but they're saying it's the fence because they don't want to hurt anybody's feelings, or they just feel awkward or whatnot, right? Like that allows you to say, okay, if we can fix that, then what do you think? And then they might end up saying, well, the layout's just weird, or it's a 4-bed, 2-bath, but 2 of them really aren't bedrooms, right? That gets you to the root of that issue. And it helps them also know, oh, this tenant really cares about the property. I'm not going to get screwed, right? Seems like a good person, right? So you might end up giving the authority to your property manager ahead of time to give that feedback to prospective tenants, I think is really valuable.
Okay, that's perfect, man. Yeah, I'll definitely try. Some of these I have tried. I do think it is a balance. Like, I haven't tried posting things on my own, Facebook outlets. Mm-hmm. I think a lot of eyes have gotten on it. Some weird things have happened. Like, we found out like a month ago that one of the neighbors was somewhat harassing prospective tenants. Mm-hmm. So they go out there, use the lockbox, look around. And I think, like, I don't know how my property manager would know this, but she thinks that it is someone related to a competitor in that neighborhood, which was just wild. Because I'm like, I don't even know what to do about that. Like, set up a camera or something to keep them off the property. Like, it was just strange.
You could file a police report.
File a police report.
Yeah, for harassment. And then you could also, I mean, if it got to this point, you could pursue legal action.
Yeah. Okay. Well, great, man. That's really helpful. That'll get me started. I appreciate the counsel.
Yeah, of course. Now, if you get I guess the end question is, when do you sell? So let's say you do all of those things and you keep bumping your numbers down, and your numbers get to a point where cash flow doesn't make sense, right? You thought it was going to be $300 a month, and now it's, let's say you're just breaking even, and that's not a place that you feel comfortable. That's when I sell. Now, if you estimated it was going to be $400 a month and you're only going to make $250, but you'd rather the cash flow, that's fine. You can still keep it, but that number, the number of rent that you can accept, directly correlates to how much cash flow you're going to make. And so evaluate it based on cash flow. If you're comfortable saying, I'm losing $50 a month, but the appreciation value and the debt pay down and the tax hedging, I'm comfortable with leaving that money in there, that's fine. That's different for everybody.
Well, that's what I was going to ask, a nuanced version of that question, because one of the things that's squeezing the cash flow, as everybody knows in this group, I would imagine, are the rate hikes. And so if I could just, if it cash flowed, I don't know, like even if it got down to like $100 and maybe 2 years out, the Fed stopped to drop the rates again, like it could be $200 and $250 if I could refinance on a, long-term note that doesn't have a prepayment penalty. So that's one of the things I'm thinking. I'm pretty comfortable with a tight cash flow, just because this thing has been such a bear to get to the end. And it is some, like, at the end of the day, I want to keep the asset, even if the cash flow is small. I would like to keep it. But that's one of the things I was thinking as well, is like, how much should I be thinking about the future in terms of, interest rates are higher than they've been a long time right now. And that probably is eventually going to change. It'll be a while, but it might eventually change. So I think at the bottom, I would sell it. Like, it would take a lot for me to sell it, but it's getting to that point, because I think part of what is motivate, maybe you can speak to this last thing, like just the emotional, like, I just want to get rid of this.
Yeah.
And move on to something else. Yeah,
that makes sense. So if you say, I just want to get rid of it and not have to deal with it anymore, you can drop rent. If you're at 1875, you could drop it $200 and just say, I just want to get it done, right? I want to get it rented. I don't want to be worried about it. I just get it done. Or you could give your property manager the authority to say, if it doesn't rent and you don't have like any interest, I want you to drop it $50 every 2 weeks and give me a heads up, say, hey, this is coming. That way, when it hits your threshold, you can say, it's not worth it, let's list it. Okay. Right. So that's something that you can do as well. The other thing, as far as evaluating this, I appreciate that you said it's a more nuanced question, because it really is, and it's different for everybody. And so one of the things that I've uploaded into the group is my TROI calculator, so a total return on investment. And I want to show you this because I don't think you've seen this. So this calculator right here is we're really just looking at these columns. So for your 1 year return, this takes into account the 4 pieces of return that you're getting, right? We've talked about the cash on cash return, but you also have appreciation, debt pay down, and your tax hedge return, right? So let's actually do this for your property and see what it would return. What's the property's value?
Probably around 220.
Okay. What was your once you refinance out, what are you going to be all in?
About 30K.
Okay.
I think.
And what do you think it'll cash flow if you get it rented at 1875?
Hold on, I have this. Let's say 300, I think. Okay. I'm not exactly sure, but I think that's right.
So let's be a little bit conservative and say it's 250. And yearly appreciation, I've talked about this a little bit, but appreciation really has 2 components. It has a true intrinsic value, like the increase of true intrinsic value, being that your market is becoming more valuable, more people are moving there. Think about, say, Dallas, right? Dallas, a lot of people are moving there. I want to say something like 8% of US GDP goes through Dallas, some absurd number. So it's becoming more and more valuable. That's the intrinsic value of the property. The second piece is inflation. And usually this number we don't care about as much, but right now it's way more substantial, right? Inflation is at 9.1%, to the point where today the Fed announced they're increasing rates another 75 basis points, right? So adding those 2 things together, let's say your market only appreciates in true intrinsic value 1% this year, but inflation is at 9% for the entire year. That's a 10% appreciation overall. I think, a conservative yearly appreciation right now, I think we can use 6%. We can be even more conservative at 5%. Your loan amount for this would be
Once I refinance.
uh,
Yeah, you got it.
75% of that. Okay, and your loan rate, you're getting a personal loan, right?
Yeah.
Let's just say it's something like that.
Yeah.
We'll kind of ignore this. This is a little bit, if you did a cost segregation analysis to offset some of your taxes. So in this situation, what you'd be seeing is a 10% cash on cash return, right? So it looks like, well, maybe that's not that great. But of that 30 that you leave in, if your property increases 5%, you just made 11 grand, right? So you made over 30% there. So in the first year, your return will be 73%. And a lot of that is coming from your tax hedge because your loan rate is high, right? Meaning a lot of your payment is going to be going to interest and not a whole lot of your cash flow is going to be able to cover it, right? Or your disproportionate balance is in favor of interest rather than cash flow. So you're going to have a lot more tax hedging abilities, right? So that's what it looks like over the first year, right? If we were to look at that over the course of 5 years, it would be in hundreds. But of course, it's just, that is just going to happen. So I like to look at it in terms of 1 year ROI. Now, if you did sell it, how much would you get back?
Like all expenses paid?
Yeah. Like how much would you walk away in your pocket?
About 30K, I think.
Okay. So 30 grand. Essentially the question there is, could you turn 30 grand into more cash flow than you would be making on this property? $300 a month. You could probably, around that much if you were to just use that as a turnkey, right? And just go ahead and buy something 20% down. But you lose some sales costs. You would have to go through the 1031 process, 1031 exchange, which isn't horrible, but it puts you on a timeline, right? You're kind of restricted there. So if you're going to make 30 as opposed to the numbers that I just saw, I would probably still focus on keeping and renting it.
Yeah. Okay. That's good. That total return is really helpful. Is that on the website now, Blake?
Yeah, it's up in the program. It's in the, I believe the deal analysis or the financing section.
Okay, perfect. Yeah, that's really good. Very helpful. Yeah, because I didn't really know how to evaluate the numbers, because it's somewhat subjective. What am I comfortable with in terms of the cash flow?
Yeah.
But yeah, that total return.
Well, and what that does is you can, our tendency is to want to think in exact values, and that's just not really how market fluency with the market works. You have to make reasonable assumptions, right? This, you've got an academic background in engineering. Making those reasonable assumptions is part of that as well. So you have to say, well, how much is going to appreciate? I mean, if, for example, in that deal calculator, if we assumed what Goldman Sachs says, which is over the next year, home prices will appreciate 16.4%, those numbers look way different, right? This is what we just did is a very conservative evaluation of what we think the market might do. Right. So that's pretty fair. You can then be really aggressive. And then your worst case scenario, even if you were just to break even on cash flow and not make anything, you'd still have a 50% return probably in the first year, just because of how everything else is positioned. So understanding the main components that go into what your true return is super helpful, particularly in a market like today's, a market where inflation's going crazy, appreciation is high, rates are really high, and your cash flow is lower than normal.
Right. Okay. Cool, man. Thank you so much.
Awesome.